Hey everyone, welcome to your Algo Lab. In our last episode, we explored optimizing long-term resampled moving average strategies using grid search. If you haven't seen it yet, we highly recommend checking it out. The links to the previous episodes are in the description below. Today, we're going to backtest the same strategy across all asset classes. Our goal is to thoroughly test the resampled moving average strategy to see if it can outperform the buy and hold approach. If you like our channel, make sure to like, subscribe, and hit the bell icon to stay updated with our latest content. Without further ado, let's get started. For each asset class, we'll present the backtesting results in 3 steps: return, risk, and risk-adjusted return. Let's begin with our fixed income asset class. We focus on the 10-year government bond prices, excluding coupon income to avoid distorting the moving average calculations. We cover bonds from the US, Canada, Germany, France, Italy, UK, Japan, and Australia. Regarding absolute return, long-term resampled moving averages do not perform well on bond prices. None of the strategies outperformed the benchmark. This is partly due to the extended period of decreasing interest rates, which has created a prolonged bull market with no significant bear markets. Consequently, the retracements are minor and can be seen as mere pullbacks within the bull market. This results in numerous false signals when bond prices pull back and then revert to the bullish trend. In terms of risk, the resampled moving average strategies successfully reduced the maximum drawdown, with 93% outperforming the benchmark. Turning to risk-adjusted returns, we observe that 53% of the strategies outperformed the buy and hold benchmark. This marks a significant improvement compared to the 15% outperformance seen with daily moving averages. Shifting our focus to commodities, we've decided to use spot commodity prices. This approach is analogous to using stock index prices without accounting for dividends or bond prices without coupons. While the actual investment returns will differ, we'll delve into those details in future episodes. For now, our primary focus is on analysing the long-term trends of commodities and to avoid any distortion in our calculations. We classified commodities into several categories based on their distinct price behaviours. Agricultural commodities include sugar, soybeans, corn, and wheat. Industrial metals encompass copper and aluminium. Precious metals comprise gold and silver. Petroleum commodities include Brent crude oil, gasoline, and heating oil. Let's start with returns. 35% of the resampled moving average strategies outperformed in agricultural commodities, with the outperformance mostly clustered around the 6-month resampled moving average. For industrial metals, 70% of the strategies outperformed, with similar clustering near the 6-month resampled moving average. In precious metals, however, only 30% of the strategies outperformed and a mere 15% outperformed in petroleum products. When compared to the daily moving average strategy, the resampled moving average demonstrates overall improvement across all commodities. Turning to the risk aspect, we observe an overall reduction, though it is not particularly significant. Turning to risk-adjusted returns, industrial metals are the only commodity asset class that consistently outperforms the benchmark. This consistent outperformance is likely due to the strong correlation between industrial metals and economic activities, leading to identifiable long-term trends. There is also a slight improvement when compared to the daily moving average strategy. For Forex and cryptocurrencies, each currency is treated as an asset. The US dollar value is represented by the dollar index, along with all major currency pairs against the dollar. Similar to other asset classes, we are using spot prices here. While roll costs do affect currency holding returns, we will take care of those details in future analyses. In today's video, we focus on long-term trends using spot prices. As usual, we'll begin with absolute returns. We observe an overall outperformance compared to the buy and hold benchmark strategy. In Forex, there's a notable improvement compared to the daily moving average strategy. For cryptocurrencies, the improvement over our benchmark is significant across all parameters, with the 6-month resampled moving average delivering the best performance. Next, we examine risk, noting an overall improvement across nearly all currency pairs and cryptocurrencies. Examining risk-adjusted returns, we see notable improvements, especially with the Forex asset class. Let's wrap it up. Over the past 3 episodes, we have backtested the long-term resample, moving average, and grid search optimization across nearly all asset classes. Here are a few key takeaways from our findings, with a focus on the averages for each asset class. In terms of absolute returns, the resampled moving average outperformed the benchmark in 16 out of 40 cases, or 40%. While still below 50%, this is an improvement over the 35% achieved by the daily moving average. In terms of risk, the resampled moving average showed significant improvement over the buy and hold strategy, with 37 out of 40, or 93% of the strategies outperforming the benchmark. This also surpasses the 85% outperformance achieved by the daily moving average. In terms of risk-adjusted returns, 27 out of 40 strategies, or 68%, outperformed the benchmark. This represents an improvement over the daily moving average, which had a 50% outperformance rate. The resampled moving average strategies demonstrate improvements in risk-adjusted returns across equity indices, fixed income, industrial metals, forex, and cryptocurrencies. The broad enhancement over daily moving average strategies indicates that the resampled moving average is an effective approach for boosting profitability. We believe the resampled moving average strategy is ready for deployment. The aim of our long-term trend series is to develop a set of long-term trend indicators and use them collectively. In the upcoming episodes, we'll continue to explore additional long-term trend indicators. Don't forget to check out our other videos. If you enjoy our content, please like, subscribe, and hit the bell icon to stay updated with our latest releases. Thank you for watching, and see you next time.